Good morning. How we doing? What's up, guys? What's up? All right. It is Wednesday, and we are moving a bit here. We're down 1.9% heading into the open. That's almost 400 points. 375 points in the red as we sit currently. So I actually prefer to see that. I like to see that because, as you guys know, yesterday we were having a little bit of a weird... The movement was fine. It wasn't anything so out of the ordinary. But we really got hung up around that break-even point. We've been doing that a lot as of the last 3, maybe 4 weeks. And it's been a little bit just annoying. So here we are, kind of dumping off into the open. And I got to tell you, I kind of hope it holds. So we'll see if we hold downside here and can get some extra volatility going here today. What's up, guys? How we doing? Josh, Exposed, Kale, Chris... Good morning. Welcome back. Maury, welcome back. Rick, how you doing? Good times. Welcome. Good morning, all. Great start to the day. Up $800 pre-market. Ready to rock and roll. Let's keep it going. LT, Mitz, Chad, Old School. What's going on, guys? Peter, Jared, and Scooby-Doo. Welcome back, guys. What's up? All right, so we've got about 7 minutes here to go. Till the opening bell. I'll get some news updates here for you once, and I think my news site is having issues this morning. So, but we'll get that as soon as I get it. Whitewater, what's up? Good morning. JM, Luke, Clinton, welcome back. How you guys doing? What'd you think about yesterday's market? It was fine. It was fine. I took a couple of trades. I happen to be wrong. I'd put them on again. The first trade was, I probably liked the second trade better, but I like both of them enough. I'd put them on again. Sometimes you're going to be wrong. A lot of traders, tale as old as time. If they have a little bit of a red day, which yesterday was a 2R red day for me, first red day in weeks, which is no big deal. It's going to happen. A lot of traders, they'll have a red day and they'll say, yeah, market's choppy today. We'll come back tomorrow. You know, this chop, you can't trade this. And to that I say, well, then you shouldn't have traded it if it was so choppy. Yesterday, I wouldn't say it was choppy. I would say it was wicky, a little bit bizarre, maybe a little annoying, sticking around that break-even point. Caught 2 good trades, happen to be wrong. That's trading. That's the life. All right, still no news here, but we'll get it. We'll get it worked out. Greg, this is financial juice. I'm just having some issues. Some of you guys are probably having issues too. But this is a pretty big news week, so I want to be able to get our headlines going. There we go. Okay, at 9 o'clock, this is Central Time now. I'll give you the rundown. 9 o'clock, we get PCE. Okay, so we're definitely going to hold off at PCE. We also get consumer spending month over month and EIA crude oil inventories at 9:30. So at 9 o'clock, we get 4 PCE numbers and U.S. consumer spending month over month. I'll get you guys kind of the breakdown of those PCE numbers when they come in about 35 minutes from now, and also the one number for consumer spending month over month. We'll see if we can get there. All right, market opens here in about 4 minutes. I'll be back before the bell. right, we've got the bell here in about 60 seconds. Let's see what we get. There we go. There we go. We got the music going. Everything's good. Just in time for the bell. 15 seconds out. Again, we are sitting down 1.7% here coming into the open. There it is. Okay, now let's get down to business here. So again, we know news. Again, 9 a.m. if you're just joining us here. News is PCE at 9, consumer spending at 9, and then at 9:30 we get EIA crude oil. Okay, that's about it as far as news is concerned. Now, at least what I'm watching. So we're definitely going to hold off around 9 a.m. Central. Now, if we look at the market inertia, you guys remember Thursday and Friday of last week. That would be these two New York session bars, these two bigger green ones. We were in a range-bound market, and these two led me to believe, okay, maybe we end up seeing a little bit of potential for trend breakouts. So coming into this week, I was thinking, okay, range market with potential of breakouts. Now, Monday was a good day. Yesterday was a little bit of a weird day. We got a lot of, I wouldn't call them false breakouts, but a lot of failed continuation. Okay, so now we look back at those two New York sessions, and they're clearly ranges yet again. Now today, obviously, we have a bit of a gap down. We're down 2%. This is a bigger move than we've seen in the last few days. So I'm thinking about that, but still, we have to come into the mindset that, hey, market inertia-wise, would it make sense to take huge breakout bets that we hold for 4 hours today? No, it really wouldn't make a lot of sense. Unless the market really shifts, maybe we get a news headline, shifts things, and then we have to do that. But right now I'm thinking range market, reversion scalps inside of ranges, and continuation scalps inside of ranges. Okay, so limit order scalping, meaning reversion scalping on the outskirts of developed channels. And if we get wide ranges or wide channels, ideally ascending or descending, not flat, then I'm looking at continuation inside if we get a setup with enough room before hitting the other side of the range. So the range would have to be relatively wide. All right, that's kind of what I'm thinking here today. That's my game plan, at least. And let's see if we can get something rocking and rolling. All right, first bar off the open here, about 70 on the range, which is not bad. That's a little more than we've seen these last few days. We've been seeing on that first opening bar, Monday I think was 46, maybe 43, mid-40s. Yesterday was similar. Now today we're expanding that opening bar range a little bit, which is good to see, hitting nearly 70. So if we can get that ATR again, anywhere between 25 and 70, that ATR meaning this blue flag, that's the average range of a 2-minute bar. It's based on the last 10. And of course, right now, 90% of that average is pre-market candles. So that's expected to rise, usually peaking sometime around maybe 8:50, coming into 9 o'clock. And then it usually starts to slowly fade off from there. But the slower it fades, the better, unless volatility is too high, which means above 70, which I don't expect we're going to see today. That would surprise me. All right, now we got to let these institutional orders clear. Give this a few more 2-minute bars, and then we can start looking for setups. What's up with you guys today? What are you trading? Are you guys, a lot of you guys were in. So, okay, when we asked this a month ago, like everybody was in evals. All of a sudden, a week later, everybody was funded, which was good to see. Now it seems to be a huge mix between personal, evals, and funded. So what's up with you guys? What are you trading here today? It's obviously a big difference. If you're trading funded versus eval, it's going to change the way you trade, most likely. At least for me, it does as far as aggression. Old school still hitting evals. Rightish personal. John still on 2 evals. Whitewater both. Rick evals and funded. Debo both. Luke eval. Pat eval. We got a beautiful mix going. John, first day trading futures, making the switch from options. Yes, listen, if you're somebody who has spent a lot of time trying to buy, especially buy short-dated options, people forget there's a sell side of these things, which changes the game. The sell side of shorter to mid-dated options can be traded extremely strategically. I'm a huge fan to this day. But it takes like 5 minutes a day to manage. Okay, I wouldn't call it active trading, taking net sell positions on options, which, by the way, can also mean spreads. But if you're somebody who's spent a lot of your time struggling trying to buy options, there's a reason for that. Okay, I would encourage you to switch to something else. Whether you want to just trade net short option strategies, have at it. I'm a huge fan. You want to trade futures? Futures are a wonderfully designed trading product. In my opinion, they're far more favorable for trading than options. It probably took me too long to figure that out, but we figured it out. Listen, the options, you have to understand what makes a transaction happen with like a call option. Why are there two sides of the market? Seems too good to be true, right? You can pay $100 and get your hands on that much leverage. How does that happen? Someone has to sell it to you. How do they make it attractive enough to sell? Well, the Greeks are a thing. They exist. And yes, it heavily favors the net sell side, especially in high volatility environments, and especially the shorter dated they become. About 45 days out from expiration, that's when that theta curve really starts to pick up steam. So the seller has to be getting something for like lending you their leverage. Right? People don't seem to understand that. You're not getting that leverage so cheap for nothing. You're getting it in exchange for taking on as the buyer, a very low probability of success, and you're giving up the really high probability of success. Biscuit, what ATR indicator? It's just, I think it's just the regular ATR within, wow, that's not true. I put the ATR at the bottom in NinjaTrader, and then I overlay the range. So it's two separate, just on the same section of the chart. Hey Christopher, welcome back. Good to see you this morning. All right, now once we get through 9 o'clock and 9:30, again, 9:30 is just the crude oil inventories. 9 o'clock is really the big number. That's PCE, consumer spending month over month. We got a Trump cabinet meeting at 10 o'clock. 1 o'clock, he's participating in swearing-in ceremony. He's speaking at 3. And we have earnings after the bell. So make sure you're paying attention. If you're someone who trades all day, yeah, we've got Microsoft after the bell, eBay after the bell, Meta after the bell. There's a lot going on this week. Tomorrow's a big earnings day. We got Amazon, Apple, Eli Lilly, MasterCard, McDonald's, all tomorrow. All right, 8:38 here. We're getting closer to our trigger time. Again, I'm open here to... PCE is a relatively big number, okay? PCE is the Fed number. It's the one the Fed cares about. The market cares about CPI. The Fed, though, cares about PCE, and therefore, in 2022, it was a huge deal. Less so today, but still not nothing at all. So between 8:45 and 8:50, if I get a decent setup in that window, I'll happily put that on because I know my average trade duration. And I would most likely be free and clear, at least ideally, before 9 o'clock if I were to put that on. And then after about 9:05, we're pretty much good to go. We might get some Trump headlines at 10 and the minutes that follow there, but we'll cross that bridge when we get to it. Luke, I'm using it's just you can get it for free. It's called Financial Juice. You can use it for free, or you can pay $100 a month, whatever. What's up, Chris? Welcome back. You're late. 5 minutes in the corner. All right. As for me, I got 5 minutes in the corner as well. 8:45 is when I kind of get rocking and rolling here, but we are setting things up. And I get a nice clean push downside, I gotta tell you. I much prefer, honestly, I don't know if you guys feel the same way. I much prefer like a big crashy day. We had this conversation maybe 3 weeks ago. Than a flat or slow melt up day. You just get cleaner moves. And the reality here is, guys, I know a lot of you guys have been bred by like financial news YouTube and the horrifying flame titles and thumbnails that, you know, you should feel horrible in a crash. That's what you've been taught. But if you're here, you're an active trader. If you're not sure what you're doing here. But if you're here, at least you have aspirations to be, or you are, an active trader. And a serious one at that. So let's think about this for a second. If that's you, what do you want? You want volatility, ideally clean volatility. And where do we get that? Usually in down environments. And you're generating most of your revenue from trading, if not trading and working. So if you're making long-term investments, what do you really want? You want an opportunity to generate more revenue from trading, and you want, number two, cheaper prices. Okay, a down environment in the market gives you both. A grindy, melt-up environment gives you neither. So, next time the market's crashing and someone in your life asks you, hey, man, I saw on Fox Business what's going on. Are you doing all right? You can just tell them that, because that's the reality. Like that's actually better for us. That's when traders really generate the short-term, mid-term, and long-term revenue and wealth in a down environment. You get cleaner moves, take the money in, drive it into the market at cheap prices, and wait. All right, couple minutes out here, and we can start rocking and rolling. Again, if you're just joining us here, we've got big news here at 9 o'clock. So we're going to have to be kind of hands-off in the maybe 5 or 10 minutes surrounding that. Eric, good morning. What's up? Jtron, welcome. Chris, how you doing? Nia, welcome, everybody. Good to see you guys. Okay, now probability-wise, here, let's look at this together. Both top two charts. All right, those are the 20 EMAs. The bluish purple lines. Now, probability-wise, especially on the 2-minute, okay, even more so than the 5-minute, but also on the 5-minute. If you guys ever see a day where we have, by the way, we have touched the 20 EMA on the 2 minutes since the open, we have. But if you ever see a day where it's like 11 a.m. and you look up and you're like, holy shit, we haven't We haven't touched the 20 EMA on the 2-minute all day. The probability of tapping it at least, and at a minimum spending, let's say it's an up day, having at least like 2 or 3 bars with lows beneath the 20 EMA, the probability of that occurring is like 99%. Okay, now, don't take my word for it. That's just my experience. The 5-minute is a little bit less, but I would argue it's like 95%. Okay, which is not every day, but that's a pretty high probability that you're going to test the 20 EMA at least once throughout the day, throughout the New York session on the 5-minute chart. Now you can see we haven't touched it here since the open, but you also have to understand that it's not going to stay put. It's going to move. So if the market crashed 7% today, it doesn't mean we have to come back up and touch 19,316, right? Because this would get dragged down and then we might pull back and tap it. But that can be helpful in making decisions in certain scenarios. So maybe I'll drop some free game here for you. Hey, Michael, it's by Affordable Indicators. No affiliation. I just like the copier. Again, it's not perfect, but it's not perfect usually because of Ninja Trader, not it. So that's a problem with all copy traders if you're using Ninja. Josh, do you have a suggestion for sizing stop loss based on average true range? By the way, I'm looking for setups now. It's 8:45. So if we can get one in the next 5 or so minutes to keep us clear of that 9 o'clock number, then I will happily put that on. If we can get one. But we're getting a bull attempt here at a little reversal. We'll see if they can follow through. Okay, Josh, any suggestion for sizing stop loss based on average true range? After hours, it might only be 10. Maybe size it the same as the ATR. Yeah, so it's long been said. I think this is kind of a common thought process in the scalping world. I don't exactly follow this, but it's kind of close. If you're running like 1 to 2 reward to risk, which again I've been running 1 to 1 lately in the morning, usually you're gonna end up risking about the average size of 1 bar to make about half of 1 bar. Okay, so if you're trading on a 5-minute chart, it's going to be a little bit wider because you're trading a little bit more slowly, right? If you're trading a 2-minute chart, it's going to be a little bit tighter, a little bit quicker. A 1-minute chart, even more so. That's not a rule, by the way. It's not like if you don't do that, you're not going to make money. There's a million ways to make the numbers work. But I hear that a lot out of scalpers, and that's like the most consistent sizing, I guess, thought process that I've heard as far as scalpers who scalp like 1 to 2 negative reward to risk. Now, if you wanted to go 1 to 1, maybe you risk the average size of a bar to make the average size of a bar. And that's going to keep your average trade duration, if you're trading, let's say, a 2-minute chart, probably somewhere between 1 and 4 minutes, depending on the day, which is a pretty good place to sit. All right, bulls attempting here. This next bar is going to be interesting. That kind of puts us right into the 20 EMA. Let's see if this gives us something here. What's up, Pumple? How you doing? Welcome. Hope you're having a good morning. Soulbound Pilot. I'm trying to wait for setups, but I keep losing focus and rushing, forcing trades. Yeah, I think you and every single other trader. There's no secret. You just have to force discipline. Be patient. If you need to, I hesitate to say if you need to distract yourself, feel free with like a podcast or something, but because a lot of beginners, they'll do that and then they'll miss trades. But do something, have something on maybe if you need to. Music, whatever. That you can still watch the chart. And eventually what's going to happen, the real answer to your, not really question, just statement, but I'll take it as a question. The real answer to that is eventually you'll just get so sick of losing that it feels better to be disciplined than it does to try to cure boredom by taking trades. That's just the real answer. And that eventually happens to basically everybody I've ever seen who sticks with this long enough to actually find some success. In the early days, I just had this conversation with one of my one-on-one guys. In the early days, you have essentially nothing to back your confidence. You have no data. You have no profits. You have no setups that work. You have nothing. So when you're sitting here doing nothing, being patient, it feels 100% like you're wasting your time. And when you walk out of the office or whatever into the other room, or you come home from work and your wife or husband asks you, hey, how was the trading day today? Do you really want to have to tell them, hey, I sat there for 6 hours and did nothing. I didn't take a single trade. That doesn't feel too good. But guess what? The more data you get and hey, I'm break even. Or hey, I was gross positive last month. Damn, that's crazy. I actually stuck to the plan and I was positive last month, even if it was just a little bit. Now, when you're sitting here, you're like, I've only ever been burned trying to cure boredom by taking trades. So when I sit here and I'm disciplined, I'm actually doing my job because I've done this in the past and look, it was the only thing that worked. And then when you leave, and maybe it was a one trade day or a no trade day, and they say, hey, how was the trading day? You say, it was great, I did my job. Bunch of other people got chopped up and lost. I didn't take a single trade because there was nothing there. And they'll say, good work. That's the reality of this. There's no secret, it's just a process. And it's up to you whether or not you want to speed that process up or go through it like everybody else does. Alright, getting a little bit of a mixed bag here. Looks to me like we might be forming the early stages of a little bit of a descending channel. Again, we have news here in about 8 minutes. Gibbs, Nico, 2 days ago when we sat in that trade, within a point of take profit for eternity, yeah, I ended up going on my phone, which helped make it to the end of take profit. Is that considered a negative? Well, here's what I'll say about that. A lot of people would say, no, don't ever go on your phone while you're trading. Listen, if you have to, otherwise you're going to sit here and take it off, fine. Fine, do what you need to do. But at the end of the day, if you're on your phone and you're scrolling Instagram and we get a news headline and it blows through your stop loss or something and you're still in the trade and you have a huge copy trader issue and that you don't catch immediately, that's a huge problem. But if you're paying attention to the screen and you know what's going on, but you're kind of just on your phone to distract yourself because you still have problems because it's still the early days, whatever. This isn't about principle. This is about getting the job done and getting enough confidence where you don't have to do those things anymore. Whatever it takes to get the confidence, do it. I don't care. Put on a podcast. Put on music. Get back to some texts. Call a friend. I don't care. Whatever you need to distract yourself so you don't make dumb decisions, but you still can pay attention. Just get it done. Just whatever it takes to get the confidence, just get the confidence. Which means the data that says, hey, I actually can do this when I'm disciplined. That's what you need. That's the asset. The asset isn't some setup I'm going to sit here and explain to you. That helps, obviously. You guys see what I take. You have to have edge. But the asset is the backlog of undeniable data that you can look at when you're down and say, oh shit, I'm actually good at this. Let's show up again tomorrow and make it happen. Everyone looks for the secret. I just told you the secret. That's what it is. Which, yeah, means you have to do a little bit of work to get the data. What'd you expect? Peter, good morning. How you doing? All right, if you're just joining us here, we are kind of hanging out, waiting for this news to hit at 9 o'clock. Entering something with a few minutes to go until PCE is probably not the best idea here. So I gotta let that clear. We also get consumer spending. Okay, so we have five numbers hitting at 9. 5 minutes out. Nico, how long you been trading for? I opened my first brokerage account in 2016. Pretty much as soon as I could. What's up, Gates? Welcome back. All right, again, 3 minutes out here from news. This is not a small number either. PCE is kind of a big deal. Volatility should last 5 minutes or less, I would say. But PCE sometimes does trigger a trend, even if that's a change in direction, but I would not bet on that. We're in a range-bound market right now, even though today's down. Dan, which prop firms you like the best right now? Right now, I am loving Apex and Take Profit Trader. And people ask, well, which one do you like better? Well, it depends what your goal is. If your goal is to scale as big as possible and you don't care about daily payouts, Apex is probably better for you. If you're someone who's like, I want to trade prop, but like 8 days between payouts at a minimum, all the rules Apex has, I don't know. I kind of just want to make my money, take it out, and have it in my bank like same day or next day. Well, then you're going to want to go Take Profit Trader. A mix of the two is my answer to which one is better. Both. But you can pick, if you want to start with one, you can pick based on what I just described fits best for you. All right, a minute 45 out here. Gotta tell you, I hope these numbers don't mess up this little downtrend we got rocking. I hope this holds. Again, downside movement is good for us as traders. Helps out in every way. "60 seconds out." Yeah, Peter, so I used to touch on this a lot on the channel. I used to talk about news constantly. The reaction out of the market is not based on the forecast of the number. The reaction of the market is based on the expectation of miss, meet, or beat based on the forecast of the number. Here's the answer to your question that's going to save you years. News is 50-50. That's the answer. Betting on news, I think, is kind of a fool's errand. It's just 50-50. The institutions understand it better than you and I. They're faster than you and I. They're closer to the exchange than you and I. All right, not a lot of volatility here. We'll let this clear and give it maybe 4 or 5 minutes, and the volatility from this headline, or these data points, I should say, will be pretty much cleared, and we can get back to normal trading. Yeah, kind of nothing here, honestly. The year-over-year PCE forecast was 2.2, actual was 2.3. Core year-over-year forecast 2.6, actual 2.6, so a meet there. And then the regular month-over-month MET forecast of 0%, that's what we got. And the core month-over-month came in at 0. Forecast was 0.1. So kind of nothing. Consumer spending month over month, the forecast was 0.6. We got 0.7. So nothing really shocking there at all. John, seems like the market reacts more to earnings guidance than actual hits or misses. Yes, it does. The guidance does take, because the market's forward-looking. It always will be. So even if, someone comes out with bad numbers, if they're able to put enough lipstick on the pig with believable guidance, not just lying, but believable guidance, then it can actually skyrocket the stock. Which is kind of silly, but this has been studied extensively. Betting on earnings is about 50-50. That's just the reality. A lot of people think like, yeah, but if I buy calls heading into Nvidia earnings, that's like an 80% chance I make money. No, it's not. No, it's not. It's less than 50 because you have to outrun the Greeks. It's way less than 50 if you buy far out of the money short dated. Again, if it was an 80% chance you make money on those, no one would sell them to you. Because you have so much leverage. That's the beauty of futures, by the way. A lot of There's a lot of confusion around options. I think most people who trade options don't actually understand the Greeks inside and out, which you need to if you're going to touch options. I don't think you should, at least the big three, right? But that's the beauty of futures, is there's nothing really to understand. It's just a trade. There's a buyer and a seller. There's really nothing else that goes into it. So it's a little bit more straightforward. You can focus more on price action and finding that, hey, 55, 60% probability setup for you, which might be different than mine. All right, we are into nearly 905 territory, which means that we can start letting things develop and putting some trades on here, whatever the market gives us. So you guys know what I'm looking at here. We have a nice, calm, little descending resistance. If we can get a nice pullback, ideally putting in a new low, kind of maintain that downtrend mentality out of the market. And then a retest, I'd probably put that on because we could argue, you know, maybe I would say we call it like a half test. This top wick here. But I don't want to get a mushy rejection. I'd want to see that follow through down beneath that low. Eric, if personal spending went up and income went down, why did the Nasdaq go up? Well, you're assuming that the expectations are based on zero, are based on baseline, based on logic. They're not. The expectations in the market are set. There's a balance between buyers and sellers coming into news of, hey, like how good, how much better than the expectation on paper, or how much worse than the on paper expectation do we think this is going to be? That's what gets priced in, not the actual logical thing. Which is a huge mistake that so many traders run, by the way. They just look at the forecast and they're like, oh, I think the number is going to be higher. It's like, no, it's not that simple, right? You would have to fundamentally understand the exact expectation of the market that gets developed based on how much better, worse, or equal they think compared to the number the result is going to be. All that to say, it's best to just not bet on news. It's 50-50. It's been studied a tremendous amount of times. You know, it's not 50-50. Good setups. All right, Bulls trying to make this kind of a little mushy rejection here. But what I mean by mushy, by the way, you know, you get this pull, test, reject, test, tiny little reject. Bulls trying to take it higher. What does that tell you? It tells you off the rejection, the Bulls have more strength than they had last time, which if I'm going to short that level, I can't see that, right? I would need to see them have equal weakness. Break that downside low like we saw here, and then make a retest. I don't want the Bulls to have any reason to have confidence, at least more than they reasonably should have, making a test that level on the third or fourth test. Well, market just going sideways here in this little range. You guys see this? Trying to make a decision around that descending trend line. I mean, clearly that's what we're doing here. We're also testing the 20 on the 2. A little bit less psychologically relevant, realistically. All right, let's see if the bulls can get a breakout going. Okay, so we're now, the bulls are trying to clear, at least hold the clear of that very obvious trendline break and the 20 EMA on the 2 minute. Keep in mind the 20 on the 5, which is far more relevant, more heavily watched. The 5 minute is much more popular than the 2 minute, right? And the only reason I really look at these EMAs is self-fulfilling prophecy. That 5 minute 20 EMA is at 19,260. So if we could clear that on a good continuation sequence, that would be a beauty of a setup. Because then what I could also do, if we look here, let's look at this. If we could do that, I could realistically look at using this region for stop hunting. Which would be a beautiful thing. Let's see if we can do that. Which takes the bulls to show some backbone here. All right, rollover of this 2 minute bar coming here in 30 seconds. You know, we're in a down environment, but we're seeing a lot of flattening out here. I mean, again, I'll commonly say if you're confused, meaning really not confused, but like you're struggling to kind of find setups, you're often in a trading range, and oftentimes it'll be sideways. If it's not making itself clear to you, usually, even if you don't see it, you're kind of in a sideways trading range. And that's kind of where we sit right now. So I'm waiting to see us break out. Again, if we can get a nice bull continuation sequence breaking above 19,260, that for me would be a beauty of a setup. But I would need to see the sequence set with a close somewhere between 19,265 and 19,300, so that I could still use the high of day off the open as stop hunting liquidity. That's what I would do. Okay, yesterday's New York session low was 19,403. Okay, so we have plenty of room. That, again, that doesn't ruin my setup, my plan here. Get a nice clean close out of this bar, and then maybe a 30-point bar out of the next 2 minute bar. A 30-plus point bar, but not too big. And that would be a beauty. Okay, good close there. Now this bar is very important to me. If we can see a nice close on this bar above 19,265, it would have to be clean, no wickbacks. Honestly, ideally more like 19,270. And a nice clean close near the high of this 2-minute bar that's coming in 1 minute and 35 seconds. That would be a great thing. Melissa, Jet, what's up, guys? How you doing? Good morning. All right, getting a push. Now we're coming into the test of the 20 EMA on the 5. All right, top left of your screen. You see that? We're making that test. So if we got to break that for me to get my setup here. We got 1 minute and 10 seconds to fix that. Bulls. Gotta see maybe 20 more points upside in the next 35 seconds and a nice clean close. There we go. You ready here? 20 seconds out. We're right up against that 5-minute 20 EMA. We got to see a clean close above there. A back test would be likely, but that's okay. That's part of the plan here. I need to see 270 at a minimum. About 5 seconds here. There's the rollover. Nothing. Nothing. We're getting rejected. Not rejected, but held up a little bit right here at the 5-minute 20. Okay, same idea, by the way, applies on this next bar. That setup's not out the window yet. Bear's trying to pull this back right around that 20 EMA on the 5. And that's very heavily watched. Bear is pulling this baby back. Yep, gains. We also might be looking at a new descending resistance here. What I need to see, which again would be a close up toward, at this point, at least maybe 280, 290 to keep it a even-sized bull bar. That would break that potential resistance anyway. But here's what we're looking at. We could see something getting put in like this. Okay, I'm interested to see if that occurs. As you see, that's kind of right against the 5-minute 20 EMA as well. Whereas a push upside to give me the close that I would have needed here, which we're not going to get. Rollover comes in 5 seconds. Would have broken that on both time frames, obviously. So there's the rollover. Bear attempt at a reversal sequence. You guys see here, I'll look at this chart. We closed beneath the wick low of the previous bar, and we were never able to reclaim the wick high of the previous bar. That's the bears trying to step in and create a little reversal sequence. We'll see if they can. Again, I'm thinking range day, range day, range day, unless we see a break, in which case I'll take continuation, or if we see continuation inside of the range, like here, in either direction, right? Because clearly we're seeing some kind of a range like this right now. It's wide enough. It's certainly wide enough, but it's got to be clean. What are your thoughts on traditional pivot lines? Well, I got to hear you describe what you would call traditional pivot lines. And then I can tell you my thoughts. All right, now there's a nice little push. Now, from a zoomed in perspective, this is a little bit of an upside trend, okay? It's not, of course. We're down on the day. The big picture, this is obviously a bear move to the downside. But in the short term, which is what I'm going off of here, I could take, my point is I could take 2 bars. I don't necessarily need 3. This isn't a reversal sequence. We've been in this up move for a little while now. So I could take a second bar if we got a nice moderate sized bull bar, closing right ahead of 19.3. Okay, which is the high of day. After the bell, at least. Traditional pivot lines, they are an indicator in TradingView. I don't know much about them. Yeah, so listen, here's a really good rule of thumb. Indicators, this is my opinion now. Okay, you might disagree, fine. Indicators, in my opinion, mean nothing. 0, unless they are heavily watched. Okay, the only way an indicator will provide any kind of ounce of adding any kind of edge at all is if other people care about them or other algorithms care about them. Now, what do algorithms look for? They look for things that people care about. So at the end of the day, you have to look at, what do people care about? People care about price action. They care about what's the balance between buyers and sellers. They care about volume weighted average price. They care about maybe the 20 EMA on the 5-minute chart, which is heavily watched. People care about the 200-day moving average on the daily chart. People care about 20,000 in terms of price. People care about obvious, very obvious ascending support levels, descending resistance levels. That's what people look at. Maybe an unpopular opinion, but it should be the popular opinion. People, like, a lot of people, they start throwing up like clouds or whatever on their chart. Listen, guys, it's just gonna confuse you. It's not gonna help you. No one's using that. No one's watching it. Who cares? No one's paying attention. If you look at a chart in hindsight, it might be like, wow, this really works. Because usually all they're doing is looking at standard deviations, and it's like, the only reason that it kind of works sometimes is because people react to standard deviation moves away from the mean. So in hindsight, those indicators that are built on standard deviations, they tend to look like they maybe know what they're doing. When in reality, you should just be looking at the ATR deviation. Okay, so if the average true range in the last 2 hours is, I don't know, 200 points. And all of a sudden we see a 500-point move on no news, which is very important that there's no news, because if there's news, it changes everything. Then people might think about, okay, I'm going to revert that to the mean. I'm going to put on a trade, low probability, low risk, high potential reward to risk. That makes a lot of sense. People react to that. Jim, good morning. We're seeing a lot of green, red, a lot of indecisive action here out of the market. Now, when you get indecisive action, I immediately start thinking, okay, well, that's fine. That's no big deal. So continuations maybe off the table. Let's see if we can take some channel scalps. But right now, I mean, this isn't much of a channel. This is kind of just a clean move. So let's see what we can get here. Skeptic, are we heading to hang out at 19,500 again today? Gotta tell you, I hope not. That 19.5 level has been a pain lately. The market just sticks to it like glue and does nothing. All right, well, here we are coming into a test about 10 points out of the high of day, 15 points out. Now, if we look at the 5-minute chart, the 5-minute bar just rolled over. And the 5-minute here, take a look. The 5-minute, you can make an argument that, well, there's kind of a clean continuation setup on the 5-minute, but it's really not, because on the 5-minute, whether the bars are growing the same size or shrinking becomes even more crucial. And you can see those bull bars are all shrinking. So someone asked, I think yesterday, like, hey, if you saw a great setup on the 5-minute chart, but it wasn't necessarily on the 2-minute, would you take it? And the answer is yes, but they're I don't know, what, maybe 2.5 times less common on the 5-minute chart than on the 2-minute chart. On the 1-minute chart, they're going to be more common, but the quality starts to fade. Whereas on the 5-minute chart, even if it's not necessarily on the 2-minute, if you get a great setup, the quality of that setup is going to be a little higher. It's all about balance. You want to balance quantity of trades with quality of trades, and that should tell you what time frame you should be trading off of. That's it. Some people like the 1-minute, the 2-minute, the 3-minute, the 5-minute, the 15. Whatever fits your personality type, whatever, however hard you want to work. By the way, trading a 10-second chart is very demanding. A 2-minute is still relatively demanding. A 5-minute, a little bit less so. Have you considered tick charts? Yeah, I think a lot of people do well on tick charts. It's just a different way to display the data. I've always preferred time-based charts. To me, it just makes sense to look at it that way. The rollover is a little bit arbitrary, but that's fine to me. It's kind of arbitrary on tick charts as well. I mean, it's just based on something. You have to roll over a new candle at some point, so it's all kind of arbitrary. All right, market's having a little bit of trouble here. Bears trying to wick these candles back down at the high of day, which is 19.3 currently. All right, well, we're getting equal size, if not slightly growing bull bodies. But we're getting wicks on top, which means the bears are still having a little bit of confidence ahead of that 19.3 high of day. And yes, it is the top of the 15-minute opening range, but offensive makes bar sizing arbitrary too, though, right? Looking steady to the upside on the 500 tick chart right now. Kinda. A little bit less so, because volatility is going to be what it is. It's just going to display the information differently. The way that I think about this, because this is the reality, especially in the futures market, on, 85, maybe 90% of the time, you technically could make money buying or selling at any point. Now, this is going to sound wrong. It's not. This is actually correct, especially early in the day, okay? Later in the day, this becomes not as much true. Early in the day, at 85, 90% of the time, you could technically make money at some point throughout the rest of the day, buying or selling at any given time, because you oftentimes see that price again. Okay, here we are getting an attempt at a breakout, by the way. We've got 20 seconds. Now, that doesn't mean there's an edge in that, in what I just said. I just think it's worth knowing and understanding that, because that could be one tick in the green, right? Okay, so here, take a look down here. We got the 5-minute chart, the 2-minute chart. All right, I will buy the rollover here and give it 15 seconds. Nothing on yet. I'm gonna give this 15 seconds. Want to see a little bit of a pullback. There we are, and I'll get long there, so I'm sitting long. Average price here, 19,302. Stop, down to 19,262. Take profit up at 19,342. We'll see if we can get a little bit of a continuation after seeing that nice close you see here. We got a nice close. We got a little bit of a wick back, but we still close strong outside, or I should say above, the high of day. Okay, so that's a long setup for me. 15 points in the money. 12, 15 points in the money. $21 points in the money. Again, take profit up at 19,342. See if we can get a nice push up there. 25 in the money. 35 in the money. See if we can get 5 more points here. We got within 2 points. About maybe 3 points of my take profit. Currently 25 points in the money. Take profit again set at 40 points. So we'll see if we can get a nice push and a retest of that high. Bears trying to pull this back a little bit. Let's see if the bulls can get one more little follow through into high of day. We got pushed in the money nice and quick on this trade. Just got to see a little bit more follow through here out of the bulls to hit target. Again, no reason here at all to manage early. That would be an emotional decision, so I got to leave this on. All right, need about 6 more points, 8 more points. Got within a tick or two a take profit there at 42. This happens to us a lot lately, doesn't it? Again, this is completely a fallacy, by the way, if you think this always happens to you. This always happens. It always seems to happen to everybody. It's a fallacy. But again, these fallacies can lead you to manage early. And that becomes a problem because you end up giving your edge away on a silver platter. Because guess what? You're almost never going to... Yeah, no, I'm still in on all the accounts. You're almost never going to manage a trade early on the stop loss like a point or two early, would you? Almost never. You're going to let it hit your stop. So to not give your edge away, you got to let it hit your take profit or else you're giving away your edge. All right, let's see if we can get about 8 more points here. 10 more points. Get up, hit take profit. Get me out, and then we can move on. Look for something else. But it ain't over till it's over here. Be a nice little pop through 40. Within a couple of ticks. Here, look at this. All right, Bulls, 8 more points, 10 more points. One more little pop through test. And it doesn't feel like those last few points mean much, but they do. They're important to your long-term edge. They are. They're very important, especially, you know, that last 5-10 points. People start taking things off 10 points early, especially. Data looks a lot worse at the end of the month. Bear's trying to pull this baby back. Here's the 5-minute. Whole lot of consecutive bull bars there on the 5-minute chart. And top left of your screen there. Pulling on back now, about 10 points. 10 points in the money here. By the way, crude oil is out of the way. That news. So 10 o'clock, Trump is holding a cabinet meeting, so we'll see if we get any headlines out of there. We'll see. Back to break even, slightly green. Few points here on the trade. Again, at best here, we were within, quite literally, I think 2 ticks. Yeah, Thinkorswim's actually displaying that I got hit. I didn't get hit. So Thinkorswim's data might be off, or I just didn't get a fill. But I think Thinkorswim's data might be a little bit off. See if we can just get a nice little back push upside out of the bulls here. Oh, Beej, yeah, you're correct. I'm looking at NQ here. MNQ up top. That would be why. All right, pulling on back here a little bit. Sitting about 5, 8, 10 points in the red. Yeah, we got that 5. Not that I'm thinking about this too much, but we got the 20 EMA in the 5-minute at about 76. Stop loss down to 19,262. So we'll see if the bulls can take this back a little higher. Pretty much break even on the trade right now. That's what we're looking like. You guys see, we got very close, but it's really easy to say, you should have managed early. And give up my long-term edge to feel good right now? No. I'm not going to do that. So, sitting about break even, maybe a little in the red here. See what we can get. Now, as far as managing early, when does it actually make sense to manage early? You guys have seen. For me, it makes the most sense to manage early if something is really, really obviously in the way, that was not in the way previously when I put the trade on, and or the big one is when ATR starts to collapse, that's the average true range, which is volatility, while I'm in the trade, and it comes to a point where I'm making too big of an ask out of the market, where it makes sense to maybe manage at like 20 points. All right, it's at about 20 points in the red now. Take a look up top. Man, we got close. That right there is the test of the 20 EMA on the 5-minute, by the way. And back to close to break even here on the trade. A few points in the red. All right, about 10 points, a little over 10 points in the green here. Come on, Bulls, give me a test upside up through 19,340. Give me a real test this time. Kind of bouncing around here around 19.3. Sitting about 10 points in the red. Well, now getting back to break even-ish. Yeah, my average here is 302. Take profit up at 19,342. Again, we got within a couple of ticks. Stop loss down to 19,262. Here's the test once again of the 20 EMA on the 5-minute chart. All right, Bulls trying to hold. You look here, the Bulls are trying to hold that 5-minute 20 EMA. They see it, which is fine. I mean, I put the trade on for a reason in that upside move. So now we're just holding through the pullback. Again, there is zero reason for me to manage early here unless we see some kind of obvious bear continuation setup before getting stopped. That, here's the kicker. I would have to enter it short if I were flat to manage it early, if that makes sense. So if I had no position on right now, if we get a bear continuation setup that triggers, but I have not hit my stop yet, then I would manage early. But it would have to be something I would take on its own if I weren't in a position. So again, if you're just joining us here, back to nearly break even here on the trade. If you're just joining us here, we put this on back in this region. Okay, so we, you see that, got very, very close. Market's playing games with us here the last couple of days, today, yesterday. This happened yesterday too. We got to 30, maybe 35 points, not quite as crazy. I think this happened back on Friday. Now, again, you'll go through these phases. This is part of it. It always feels like, why does this always happen to me? And it doesn't. It happens to everybody just the right amount as far as the probabilities are concerned. It's a fallacy to think this always happens to me. I should just take it early. It doesn't always happen to you. It happens to all of us in equal amount. Yes, Debo. Very good point. That's a point I like to make as well. It happens both. It goes both ways. Happens to your stop too. All right, here we are. 25 points in the money again. Take profit up at 19,342. Let's see if the Bulls can actually show a little bit of damn backbone here this time and push us up through 42 here on MNQ. There's a nice clean close near the high, and there we are. We are hit out there at profit. All right, so that's a 1R winner there, and we are flat. So that puts us up 1R, which is 2250 on the day. Here, I'll show you. That's what we're looking like right now. Discipline is everything. Very important. And we work hard to get our edge, guys. You don't want to just, it's trading is hard enough as it is. You don't want to give away your edge on a silver platter to make yourself emotionally feel good right now. I could have easily taken that off at 30 points, 35 points. But then, in your trades, you're always going to let it go to your 40-point stop or whatever stop you're running, right? Almost every time. Now, it'll change your win rate slightly. Your win rate will slightly increase, but will it be enough to maintain your edge? In a lot of cases, the answer is no. So you're quite literally giving away your mid to long-term edge to feel good today. That's not a trade I'm willing to make. Yep, Jtron, it could have also hit my stop loss. Of course, that's every trade. I operate on the law of large numbers. Big sample size. A little bit of edge, scale it out to a big sample size. Then it works. Every individual trade means very little. Just a cog in the wheel. All right, let's see what else the market will give us here. Again, I'm still thinking, hey, range day with small little trend potential, but big outsized moves I would question here. So it wouldn't surprise me in this environment, by the way, here. Let's clean up our chart, by the way, as we go. It would not surprise me at all. We got this big clean upside move. A lot of times in these rangy markets, what you end up seeing is you end up seeing things kind of flatten out a little more red bars mix in, and you get maybe a little flat or maybe ascending channel until you see a break one way or the other. Maybe you get a second leg up, maybe you break downside, and then you change your mentality and start trading different setups. All right, but right now, again, would not surprise me at all if we see a flat little channel here start to develop after that little upside leg. By the way, a lot of new people here. If you guys haven't yet, please press like on the stream. It does help out a lot. Appreciate you doing so. Bear's trying to pull this on back. You see that? Trying to put in that little channel. After a nice clean leg up, we see this constantly, especially in the last week. And that's the market being in a range-bound mentality. Right? Big breakouts are getting questioned because everyone sees, hey, the market inertia, this thing hasn't been breaking out. Every breakout's failed. All right, now 12 minutes here. Again, we have Trump holding a cabinet meeting. Keep an eye out. Angel, just noticed I passed an eval on that trade. Nice surprise. Good work. Now quit touching that account. I've seen too many people pass an eval, and then they take another trade and they lose the pass. Quit touching it. It's over. You're good. Jeremiah, how long does the pass usually take to process before you can trade again? If we're talking about Apex, they send you an email that night and you can trade funded next day, next trading day. So it's very quick for Apex, which is, by the way, right now, 80% off. Single day pass. Use code BIG. Best deal always. Best deal always. That goes for a Take Profit Trader as well. Chris, up 6K in my Take Profit Trader group with that trade. Moving to your Apex groups. Cool, man. Keep up the good work. I'm really curious if we end up getting headlines out of this Trump meeting at 10 o'clock. All right, we're about 10 minutes out. I'll tell you what, I'll be back in a couple of minutes. All right, we'll see what else we can grab here. I think this is a little channel developing after that upside push. Be back in a few. Don't go anywhere. right, we are back. All right, Trump is holding his cabinet meeting right here at 10 o'clock, so we'll see if we get any headlines coming out of there. 66 order. Nice win, Nico. It's like nothing happened yesterday. Well, I mean, really nothing did. Nothing happens any day. You're green, you're flat, you're red. At the end of the day, you need to zoom out, look at the week, look at the month, look at the year. But more realistically, look at your weeks, especially your months, and see how you're performing. Something that helped me a lot that is still, I get it. It's hard. Like having a red day is not fun. No one wants to have red days, but they're part of the game. You're never going to have a career where you avoid red days entirely, so just embrace it. Something that helped me a lot, this mindset, is all of the time frames that we measure performance by, like day to day. Okay, I sit down, I start trading, I finish trading, I get up and I leave the office. The result of that session is completely arbitrary. It means almost nothing. You could roll it into the next 3 days, and we could start calling a day 3 days of performance, and then we would all be, we'd all have bad mentalities if we're red for, our 3-day day, if that makes sense. You guys know what I'm saying? It's all arbitrary. So whatever your P&L is at the end of the day, I really think you should think of it that way and think, okay, well, just because I'm getting up and leaving, and I'm going to come back down and sit down tomorrow, what does that really mean? It's just basically me taking a long break and then coming back and trading. Yeah, a new session, your P&L is cleared. But what does that actually mean? I don't know, maybe that doesn't make sense to you guys. Wrench, do you offset your EMA by -1? Do you mean on the candles? My EMA up here updates at the close of each candle. Which, to be completely straight up, is because I haven't fixed the setting yet. That's it. I would probably do it on every tick, but it just doesn't really matter that much for me to care. Pumple, how do you normally approach payouts without putting yourself at a risk of the trailing drawdown? Do you only withdraw a small percentage of the profits? So I usually will request, I don't know, whatever it is, I'll request oftentimes just back to the backstop that they set. So if we think about like Apex, let's talk about like a 50K Apex account. The drawdown stops at 50,100. Once you hit 52.6, you can technically request a payout if you've met the 8 days, if you've not broken any rules. And you can request back down to 52.1. Okay, so instead of now a $2,500 drawdown, you have a $2,000 drawdown, but it's no longer trailing. Okay, so I'll usually just request as much as they let me, because there's max that you can request. It depends on my buffer. I'll request as much as they let me, and I don't care if we go back to the backstop because I trade small enough because I scale horizontally, not vertically. Vertical scaling, I think, is a big mistake in prop trading. Trade small per account, and then over time, just scale out the accounts. And it's not like you need 40 accounts to make good money. Obviously, that's ideal. But it's not going to take as long as you think, I don't think, to scale horizontally. You'll hold on to the accounts a little longer on average. And since you're trading small, you can afford to pull out as much as they let you. Even if you only have, I only have $2,000 worth of drawdown left. Well, it's like if you're only risking, 80, 160, 240 per trade per that account, you can lose a lot in a row and still be okay. Nico, so you don't have FOMO anymore? Like right now to go long? I gotta tell you, I just don't care. I mean, that's the honest answer. I don't have anything more complex than that. I just don't care anymore. The market could shoot up 12% right now, and I might be like, wow, that's a crazy move. I'm glad I wasn't in a trade short or something, because that would have caused stop loss problems. That's how I think at this point. I'm not like, wow, I should buy. Because I know there's no edge there, so I'm not interested. If there's no edge, I don't care, because I know that the more I trade that, the more I lose. It's kind of like, do you have FOMO? Like to me, that's the same question as asking me, do I have FOMO to go play roulette? Or to go sit down at the blackjack table? And the answer is like, maybe once in a blue moon for fun, with the intent of blowing the money, but it's not like I do that, ever. I haven't gambled in years. Years. So to me, that's like the same question. It's like, no, I don't care. I don't want to go sit at the blackjack table, because I know the odds. I wish there was like a secret. It's just, I've been cut enough times where I no longer care unless there's edge. And if you're not there yet, you'll get there. Just trade small, get data. That's how you feed that machine. How long did it take you to become profitable? Well, let me think. So, I really wasn't profitable at all for 24 months. I started to see some success, I think, on the curl of that kind of like third year, if I remember correctly. And then I was paying all of our bills, which were not a lot at the time, but I was covering us completely with just trading profits starting in like the third year. But I gotta tell you, if someone's like, well, does it have to take that long? It can take 10 years. I've heard people who stick with it for 10 years and then they finally figure it out. But I don't think it has to take 2 or 3 years. I think if you speed up the process by not falling into the traps that everyone does, which in hindsight, everyone knows what they are, you can speed it up. But listen, it's not going to happen in 3 days. But in hindsight, it's going to be like, wow, that was hard, but here we are. All right, getting a nice push upside now. We're about 250 points in the red, the Nasdaq is. We're pushing into high of day here. Now, Trump is holding a cabinet meeting, so I'm curious to see if we get any headlines kind of leaking out. But other than that, I'm watching here. Pulling back on this bar here. Okay, a little bit of a wick back downside. Not there in and of itself. That's not a decent enough setup for me. That's kind of right on the edge. Do you only trade A+ setups? I'd say I only trade A setups. A+ that's a big claim to make. Sometimes I have trades that are better than others. Setups that I put on, by the way, not necessarily the result. So I'd say like A-, A+. But there's not a lot of wiggle room there. But that'd be giving myself too much credit if I say I only trade A+ setups. Because I hold A+ setups to a high standard. Would you take the 5-minute rollover? Yeah, so if we look at the 5-minute here, if we got a nice growing bull bar, I'd be interested, but it would have to not be wiki. It would have to be very specific. Now we're pushing. By the way, some of you guys might be wondering, well, I feel like I see a setup. What's going on? Here, let's look at this. The New York session low from yesterday is 19,403. Okay, we're 10 points away, so keep that in mind. Sonia, I appreciate you saying so. Yeah, it was a lot of trial and error for me. It was hard. It was very hard. I'm not gonna lie to you, but I don't know. It's worth it, at least for me. For a lot of people, honestly, I don't know if trading would be worth it. For not you guys. For most of you guys, if you're here, I think this is worth it. If you're here, because you guys are here like every damn day. It's like clearly you want this to happen. But for most people, just walking on the street, I don't know if trading would be worth it. Honestly. Yeah, you can do well. Yeah, you can work from home, but the pain that it takes most people who don't try to like shave time off really and just go through it on their own, I don't know if it's worth it. For me, it is. For me, it was. But I don't know. John, what exactly do you mean when you say you're looking for the rollover? Are you talking when it goes from one color to the next within the same bar? Okay, so I've began to realize that the rollover is confusing terminology. So that everyone knows, when I say rollover, all I mean is the close of one bar into the open of the following bar. That's it. That's all the rollover is. Old school, is A+ when everything falls into place and there's stops that can be taken out? Yeah, an A+ setup would be like one that I would pick out to put in a book. Like, this is exactly what I'm looking for. Those don't happen that often. I wish they did. I wish they happened every day. They don't. Well, you know, this move upside is clean. However, we're seeing a lot of wicks. Like here, look at this 2-minute. We're seeing a lot of topping wicks. We're seeing red, green, then green, 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 but a wick back downside. Red, a push up, now red. You can have a clean move up like this that doesn't really give, like me, any great setups. The potential's here, but right now I'm more paying attention to 19.4-ish, because 19.403 is yesterday's New York session low. So paying attention to that. Again, 19.4, I expect a little bit of a hang up there. If we can get a nice pop through, maybe that would be good for, 10 points on a breakthrough, that hesitation right around yesterday's New York low, but that's about it. It's not like there's really a lot of stops, right? Because, we're putting in new highs every couple of minutes. Dan, thanks for the trade. Time for the desk job. Peter, down 963 on the day, 1,100 drawdown left. Well, just good trade after good trade. Listen, if you just keep putting on good trades, if you hit the drawdown, so what? Now, if you look back and you're like, well, in hindsight, I was trading way too big. Then try again, size down a little bit. But yeah, micros, I think, are the way to go here with prop. Listen, I've ran the numbers countless times. The only accounts that for me might work well for trading one mini, which just sounds crazy, are maybe the 250k apex, but more so the 300k apex would work pretty well for me to trade one mini. The big Tradeify accounts, hell, even the big 150k take profit pros, there's not really enough room. The minis got big. That's why they introduced the micros. There was a reason they brought micros to the table. They looked at the minis and said, man, these are getting kind of volatile. It's kind of tough for a lot of retail traders to trade these. These are pretty, these are kind of risky. Micros are great. There's a ton of money to be made in micros. A ton of money. No shame in trading them at all. In fact, it's the opposite. It's a more mature decision to trade the micros. One trade so far here today, and this is how we currently sit. What is that? 22.50. So far on the day. Just 1 hour. Right, so we're still getting kind of that slow melt up. Not really a channel. It's too clean of a move upside to trade any kind of ascending support. It's just not really volatile enough. We're kind of just melting upside, and we're not really seeing a lot of continuation. So this, for me, this kind of move, I gotta wait to see some kind of break, whether it's a break sideways. In an aggressive move like this, an upside break is a little less probable, but it can come, or a downside move. So, yeah, there we go. We're trying to test, literally right now, we are testing yesterday's New York session low. Let's see if we can kind of just get free and clear of this. Yeah, look at the 5 minute. I haven't really glanced at the 5 minute in a couple minutes. This is aggressive. This is a really prime example here today, by the way. I talk about this a lot as we come into the opening bell in the morning, each morning on the stream. The probability of the move coming into the bell, continuing after the bell, like a lot of people think, hey, the probability of this downside move continuing, man, that's strong. It's got to be 80%. I'm just going to short the open. Well, it's more like 50-50. Really, it's like 50-50. The move into the open plays much less of a role than you think. Listen, the best way to approach this is just trade price action, find setups that make sense in your brain, take them as they come, And when they present themselves, hit them. Accept the outcome, do it again. All right, there's a little push upside. Let's see if we can get a nice little sequence starting here. All it takes for me is a few bars. But in a really tight upside range like this, that's too tight to trade a channel, it gets a little tougher. Because you have little resistances up top, but the support, it's not enough to really buy the support. So, you know, a lot of people, and this is especially true in futures, a lot of people are scared of moves like this because they don't trust them. And I get why you feel that way. However, in futures, you got to let go of that fear. If this presented a super clean continuation setup for me, 3 consecutive bull bars, growing with the entry bar closing at or near its high, but not being outsized, I would slap that on every day. Okay, I think you should, you got to let go of the mentality of like, oh man, you know, we've really bounced up out of the hole. I got to be careful here because this thing's going to pull back. I think that's, especially in futures, I think that's going to plague your trading. Now, it's hard to find an entry in a move like this, especially when you're not really getting a continuation sequence. But, by the way, the one exception to that a lot of people don't think of is a 50% retracement. Now, we put this in pre-market, so it's a little bit less relevant, but hear me out for a second. Let's say you open, let's pretend this was the New York Open. You get a pullback way down here. And then you bounce, somewhere in the 50% region. Think about what's going on there. You have a whole bunch of bulls that were sitting long around here, or got long in this little pullback, who have held and been averaging down all the way to the bottom. Then when you get a 50% retracement, you know, between 40 and 60%-ish, because not everyone's going to have the same position, it's going to be slightly different. What happens? All those bulls are now break even. What are they doing? They're thanking their lucky stars. They're selling at break even. They're like, oh, I can finally get out. I don't care if I'm green. Just get me out at break even. I was down thousands. And they're all selling, and that adds selling pressure for a while until that clears or pulls back more. So that 50% retracement, that's an area to watch. Okay, because there's something real happening there. All right, pulling on back here, down through yesterday's New York session low. Sergio was down 1.2K, took it one trade at a time and only down $100. Let's go. Good work, Sergio. That's the way to do it. If you're sitting red and you're like, you know what, there's still good setups. Emotionally, I'm fine. I should probably just keep trading. Then don't size up to get the loss back. If anything, stay the same or even size down a little bit. If you need to, this is something that I've done in the past. Take a black Post-it note. You can't see through it. And just cover your P&L. And then take good trade after good trade and just be patient. And, you know, not every day is it going to just magically work, but Sometimes you're going to look up, you're going to uncover your P&L at the end of the day, you're going to be like, oh shit, I'm break even, or I'm green. Or at least way less red than I was. Anything you can do to just make yourself be patient and take good quality trades over and over and over again is going to help you tremendously. All right, so we're coming in for a test of the 20 on the 2. The 20 EMA on the 5 minute right now is down at about 19,340. So about 40 points away, 45 points away here on the 5 minute. But you get these clean moves upside. I mean, listen, we talked about this earlier, right here. Take a look here. We literally just talked about this. You get this clean move upside, then you get a little bit of a widening out, okay? Return, second leg up, clean move upside, and now we're starting to get that little bit of a widening out. Repeat patterns, repeat behaviors. Here's a little range forming. Interesting. Let's see if we can get that range getting a little cleaner. Ryan, I created a Pine script based off your rules, and it's up 5K trading micros. It's a little wonky at times, but I wish I followed it. Lee, good morning. Welcome back. How you doing? Jeremiah, good question. Would this count as for a 2-bar continuation setup if it closes at the high? You know, it could. If this bar, in my opinion, closed at the high, it would be a little too outsized compared to the previous bar. Plus, after that bigger pullback bar, I would prefer 3 with less of an outsized bar on the entry bar. Discretionary call, but that's kind of built in my brain at this point. Very interesting movement here today. It's clean. It's, you know, this is like a swing trader's dream, but with more of a scalping mentality, it's good. It's just not really leaving a lot of openings. again, we've been able to catch one trade up 20, what is it, 2250 so far today. I'm not here for one trade. Let's see what else we can get. Well, you know, on the bright side, I haven't seen any headlines out of the Trump meeting. So I hate to say it looks like we might be free and clear, but we might be clear. And I hate to say it, as we get tariff news moving the market 400 points. ATR is sitting at 28, which is actually pretty half decent this time of day. Yeah, that's well within my range. 25 to 70 is my range. You guys see, right? We just talked about this. The market tends to flatten out in range-bound times after you see these clean little melt-up legs. Very common. However, unfortunately, what happens a lot of the time is you end up forming a little flat top, or maybe like an argument for a descending. And it has to last long enough to really give like 3 clean touch points for it to really form a tradable channel for me. And sometimes it doesn't. Like back here, it didn't really. We ended up in a second leg up before that occurred. But I'm open to either way. I'll take continuation, I'll take channel. Just whatever develops first. I don't care. What? Wife's in the chat. Uh-oh. Now again here, we may end up just seeing this turn into a flat top. If this develops into a channel scalping mentality, I don't want a flat top. I want an ascending resistance and an ascending support, because you look at this. There's a very good argument for this if we can get this little flat top out of the way. Get this bounce a little less mushy, a little stronger, pushing into intraday highs. That would be a beautiful wider channel that we could start taking a little, you know, a trade or two off of. Otherwise, if we don't get that and we just get a push up through with continuation, again, like a 3-bar sequence, I would need to watch this potential resistance. But if we could clear that and render any argument that the bears have of shorting there, because it's gone, meaningless, then that becomes the new mentality. Again, either way here, I don't mind which way it goes. here's the test of that flat top. Now, keep in mind, by the way, yesterday's New York session low was 19,403. Okay, but the open yesterday was 19,428, which is literally where we are right now. Worth mentioning. All right, sounds like Trump is live now. About time. About 37 minutes late. But we may get a few headlines, so keep an eye out for unexpected news. If you are going to be in a trade, live stop orders heavily encouraged. We'll see if we get some headlines there. All right, I've had no coffee all day. I'm gonna go hit that. I'll be back in 2 minutes. Man, this market is just not really giving us much here, is it? Volatility's kind of slow, and that ATR, we're still at about 25, by the way, on the ATR. So we're holding. We're holding volatility, but as far as price action, we're getting a lot of sideways. Melt up sideways, melt up sideways. Again, one trade so far today. We're up, what, 22.50 so far, but again, looking to see what else we can grab here. Javaz. I'm saying that right. Hi, everyone. Hope you're doing well with your trading. Nico, this is my first time watching a live session. Thank you for sharing your expertise. Well, welcome. Hope to see you become a regular. We have a lot of regulars in the chat. People show up every day. Good to see you. Yeah, I'm curious to see if we get headlines out of this Trump meeting here. It wouldn't stop me from putting on a trade just because that's going on. But again, if you're gonna put something on livestock, you know, trading naked in this environment, I think is a huge risk that is not worth putting on. You know, even if you were scalping without live stops, which is fine to do, by the way, if that's your method, and you had, let's say you had a 92% win rate. If you happen to hit, you know, if you're in a trade and you have no stop, and Trump says something about tariffs and we drop 300 points, that hedge is gone. Not worth it. So, you know, there's markets where that can be done a little more safe. This is not that market. All right, there's a push through high of day. Pulling on back to the previous high of day. Let's see what the bulls set in here. Or if the bears end up wicking this back. Again, here, really, let's do this together. Kind of watching this. I know bears are watching that. Okay, now if we got to push upside in a test, obviously this bar would be like the 480s. As we get more rollovers, it'll creep a little higher. But I know that the bears coming into that are going to have some confidence. Now, this bar has 60 seconds left to close. To give me an entry, I would need to see a close up at probably at least about 19,450 here. Now, the question is, does that give us room? Well, I would buy the rollover and get a push up just kind of below 19,490, which is a little under 40 points. That's tough. That's very, very tight. Everything would have to go perfect. Let's see. Let's see if we even get that close to even think about it. All right, 5 seconds here. There's the rollover. 5 minute. I'm gonna hold off. We're gonna extend that trend line. See if we can get a little more room going up into 19.5. Again, the open of yesterday's New York session is 19.428, so we're just barely clear of that. If we were in a trend market, I would have put that trade on, but we're not. We're in a range market that happens to be trending a little bit right now. Nico, can you explain to us what the word edge means as it pertains to trading, please? Sure. Statistical edge is going to be in trading. The bigger the sample size of trades gets, the higher the probability becomes that you are net profitable. Okay. Now, the casino has on blackjack, what is it? Somewhere between a 1 and 2% edge over the player. That's a statistical edge. That's why when the casino is, let's say they deal you cards for 30 minutes and you're up, the casino is down, let's say $10,000. Does the casino say, all right, we're done. We're going to stop dealing blackjack because we don't want to dig the hole deeper? No, they don't think of it that way. They do everything they can. They set the rules, the parameters. They have table limits. They have the rules of the game, obviously. That all leads to them having a 1 to 2% edge. Okay? The casino doesn't care about the swings because the math in the end works, and it works quicker the faster they deal you more and more cards. And they know it's coming. Not necessarily from you, by the way. You could get up and walk away. They don't care if it's you sitting there or your friend or a stranger. They just want to deal cards to as many people as possible, as often as possible, as long as possible. And they make more money. That is having an edge. Still widening out here into a channel. The difference between a range-bound market and a trend market. Okay, see the bottom of my screen here? That's the daily chart. Each candle is 1 day, right? We're currently in a range market. You can see the ranges of those bars is tight. We're not seeing a whole lot of movement. Now, there's not really a great example here of a trend market. You could go back here and look at the percentage of trend versus range days are. I'm assuming, oh yeah, I'm assuming that ranges are the vast majority. Most days are going to be range days. And that's a big mistake that people make. If I had to, it depends on the market. If I had to guess, like, all time, how I would rank them, I'd say probably at least 85%. Well, at least 80% of days I would call range days. Because sometimes you get trend markets that last a while. So that might bump that up a little bit. But I'd say probably about 80% plus are range days. And what you get is you get a lot of people betting on breakouts, big trends, every day. And then they wonder why it doesn't go in their favor. Well, it's because the range lately has been a couple hundred points and you're making a 600-point bet. Can't really expect that to work too often, right? Market inertia is a very real thing. Tends to continue to do what it's been doing until you see a fundamental shift, typically. When I say it tends to keep doing, that goes for direction in some cases, but mostly what I'm talking about is volatility. Okay, Okay, well, let's see if we can get a real bounce here, not just a little mushy bounce. I want to see if we can clear that intraday high on this bounce off of that trend line. We did respect it, but this is the second portion of that third touch point. See if we can actually set that in. All right, there's one bar closing at its high. Very good to see. And testing the highs now. Struggling a tad. Let's see if the bulls can take this a little bit higher and then maybe give us a retest. Struggling a little bit with this high. I mean, that's more or less okay. It's not ideal, but it's okay. We already did put in a new high, just barely. Again, I'm talking about the bounce off of the trend line. What I don't like to see is bounce, bounce, and then the third bounce, which is kind of the finalizing bounce that sets the trend line, at least for me, in my opinion. Oftentimes, you'll see a mushy little guy and then a retest, and a lot of times those roll over. That's just my experience. So I like to see a nice strong bounce out of the third or rejection if we're looking at a descending resistance. And then that fourth becomes what I'm interested in taking. All right, slow it down, you guys. Oh man. So I've talked about this quite a few times, and I think this is one of those points that I think people kind of miss. Here, this shows it better. You guys see these bounces? I hate. That's a strong word. I very much dislike. When we see a bounce and the whole bounce is one bar and then the whole retest is one bar. It's not clean. That's not what we've been seeing. This is now different price action. It increases greatly the probability of rollover. I can't take that. I wish I could. I can't. Well, if you're just joining us, here's where we currently sit, by the way. One trade so far on the day. Not intentionally taking it easy today, but kind of being forced to. Not a lot of great opportunity, but we got one. Able to lock something up so far. Let's see if the market gives us anything else here. El Rock. Nico, first, thank you for what you do for us. Can you tell us how to set up the ATR? Yeah, so go to where you add. I assume you're a Ninja Trader. And sometimes people's Ninja Traders look a little different. Go to where you add the like studies or indicators, whatever Ninja Trader calls them. The chart, add ATR, and put it in the bottom. Then add range. Oh, by the way, set ATR. If you're on a 2-minute chart, I like to set it to 10. Then go ahead and add range and overlay it right on top of the ATR. Same section. That's it. Pumple. Yeah, yesterday that was it. That was it. End of the stream. There was really, I just walked. There was not a lot for me. I went, ate lunch. I came back. It was like, I think I saw some people saw that there were a couple good trades in the afternoon. I wasn't here to take them. So that was it yesterday. Yesterday was a red day. No big deal. Chris, good question. Do you trade small as soon as you fund an account, or are you slightly more aggressive until you hit buffer? You guys have seen, I usually start a little bit smaller. So, well, that's actually not necessarily true. In, like, let's say, for example, Apex 100K static accounts, which I have a few of. I will start with 1 micro, and then I move up to 2, and then I move up to 3. With Apex 50K accounts, I don't say this to sound like whatever, but like the eval is so easy to pass. Like it doesn't take very long for me to pass the evals on the 50Ks. Because, by the way, because I take more risk on them and trade them aggressively because they're so inexpensive compared to the opportunity cost, that I just start the 50Ks trading 3 micros, and that's pretty much where I stay on the 50Ks. I hate to say they're easy to pass. They're not easy to pass. They're just, I trade them aggressively and I can pass them quickly, is what I mean to say. Pumple, would you take a trade when the ATR is lower, sub 20, for example? Yeah, I would, but I would lean heavily more into negative reward to risk, Pumple. That's what I do. As the ATR falls below 25 and below 20, here it's at 30, so it's no big deal. I can stick to 1-to-1. But as ATR falls below 25, especially 20, I lean heavily into like 1-to-2 reward to risk and just try to get that win rate up. So you guys see this. Inside of a range, I gotta tell you, I'm never a big fan of seeing this where it's big, equal-sized green, red, like these last 4 or 5 bars. This is kind of ugly. This is nothing at all like what we were seeing previously. Like these, wow, really like this was a very clean bounce. If the third bounce had looked like this, that's a beautiful setup. I'm sorry, if the fourth bounce had looked kind of like these two, beautiful. But the fourth looked like this, it's just ugly. You end up getting this flat top, which ends up forming a wedge. And when you tighten down a wedge, the tighter it gets, yes, the flat top, in my experience, has a higher probability of breaking than the ascending level or the descending resistance if you were to flip this and mirror it. But it tends to get more restless as the wedge tightens. And I don't like being in a trade with a tightening wedge like that if I can help it. Pat, on the evals, do you trade the mini or always micro? I trade minis on the evals. Again, I get aggressive on the evals because the more, I think, payouts you're taking and the better you're performing and the better your data looks, I think you can justify being more aggressive on the evals because, again, opportunity cost is a thing. Depending when you buy the eval. I mean, like the eval right now at Apex, it's like 30 bucks. Okay, now if you're brand new and you have it, you're not sure if you have edge, which we've all been there, by the way. That's not a bad thing, it's just where you currently are. Yeah, take your time, trade the micros in the evals, get your edge for cheap. That's a smart way to do it. That's the better way to do it. But if you're someone who has an edge and you're like, I know what I'm doing, I performed well, I have data to back up that, hey, like this is what I do. I don't think it makes sense anymore to spend, 2 weeks in an eval. The opportunity cost is too high. The mental capital allocation requirement is too extreme. Here's the test of that flat top. You guys see that? All right, so, ideally, if we could break through this flat top, if I can get a continuation setup going, I would put that on. Otherwise, if we break through and then fail a continuation setup and then come back in for a retest of that ascending support after a break of the flat top, by the way, I would need the flat top to be rendered kind of meaningless. Then a retest of the ascending support would still be a channel scalp here for me. So there's a little break. All right, well, at this point, you guys know what I'm looking for. Listen, hey, take Profit Trader, 30% off. No activation fee. Use code BIG. You get both those things. No activation fee cuts the price like in half. And Take Profit Trader, it's a beautiful thing. Daily payouts. Now, if you're looking to just scale as big as you can, I prefer, if you're just going to pick one or the other, Apex is probably better for just scaling, but the payouts are less frequent, okay? So you see that I'm running a mix of the two. I think that's probably the way to go. So, all right, guys, listen, I'm live every morning, 8:15 a.m. Central Time. I will see you guys in the morning, all right? Have a good one. Finish out strong. Stay disciplined.